ACA is not that important. Agriculture extension project, they may ask in the in the transaction. I mean, if they give the following the company earned or the individual earned net profit after debit and credit of the following items. In that way, if they give in one of the transaction, they use the same word, agriculture extension project, expenditure on that. Okay, whatever the expenditure incurred on agriculture extensional project, 100% of such expenditure is allowed. Allowed means it can be deductible, it can be deducted. Who can be deducted? Any assessee. Okay, any assessee. Agriculture, skill development, same, both one and the same. Percentage of deduction, both one and the same. But eligibility, you have to see it is applicable to all. Assessee means all, including individual. 7 persons are there, no? It is applicable to all. But skill development, it is applicable only to companies. You have to be very careful when you read the question, whether it is company or other than company, partnership, individual, like that. You have to give emphasis on understanding the status of the individual. Okay, if you do not concentrate or observe it, there are few deductions which is applicable only to companies and few deduction it is applicable to all. Few deduction will not applicable to firm. You have to be very careful in that sense. Okay. Next, amortization of preliminary expenses. Preliminary expenses means like any expenditure which is incurred prior to setting up of business, like printing of memorandum and articles, legal expenses, prospectus, and any other expenses, formation, company law, fees. All these things are called as preliminary expenses. It is incurred before business is being set up, before that, or after the business setup, but before the production starts, commercial production starts. In that sense, all these expenditures. Assume all this, I will write down the amount. It will be 12 lakhs, 15 lakhs. Just I am taking the ad hoc figures. 35 lakhs. Formation 40,000. CLB 20 lakhs. Total comes to 82 lakh 40,000. Assume. Okay. This is not the actual figures. When the company starts the business and after the end of the year, it prepares P&L account. You guys agree with that? Companies or any business entity will prepare profit and loss account to know how much is the profit earned during the year. If they give P&L account, I don't have P&L account format here. If they give P&L account and they give some adjustments, in that adjustment they mention these kind of expenses, and they will also state that the preliminary expenses with respect to printing, legal expenses, whatever it is, preliminary, the total amount comes to this much, and this amount has been debited in P&L account. Okay. First, you need to ascertain whether it is non-corporate assessee or corporate assessee. How to ascertain? Kundan Lal, is he corporate or non-corporate? He belongs to a company or non-company?
Non-company, sir.
Non-company. Okay. For company, different way of calculation, but methodology is same. There we calculate two parameters. We check the two parameters, but for the non-company we check one parameter. Okay. Like this, they give. We will see whether there is any another question relating to company. X they are given, it is also individual. If it is company, they mention ABC Private Limited, X Private Limited, X Limited, MN Limited, like that they mention. Okay, there you need to understand it is company. If it is partnership firm, they mention ABC are partners of a firm, like that. Okay. If you get any picture relating to preliminary expenses, first you need to see whether it is an Indian company and other non-corporate. Non-corporate means other than companies. Okay. Based on this, for non-corporate, 5% of cost of the project. For companies, 5% of the cost of the project and 5% of capital employed. You need to take this into account. Okay. In case of non-corporate, the eligible amount is 5% of cost of the project. In case of corporate, you need to see two parameters, 5% of cost of the project or 5% of capital employed. Assume your cost of the project. Cost of the project is 20 crores. If your cost of the project is 20 crores, you need to see how much is 5%. How much it comes? Is it 20 crores? 2 crores. Okay, 2 crores. 5% of 2 crores comes to 10 lakhs. Now you have to see with respect to non-corporate, this is the eligible amount, 10 lakhs. But how much you have incurred? 82 lakhs 40,000 you have incurred the preliminary expenses. Of these two, Whichever is the least, you have to claim it as deduction, that to 5%. Actual preliminary expenses this much. Eligible amount this much. Of these two, whichever is less, which is the least one of these two? Is the least one 10 lakhs. This will be allowed in 5 equal installments. How many equal installments? 5 equal installments. That means 2 lakhs, 2 lakhs, 2 lakhs, 2 lakhs. It will be allowed for 5 years. Okay. In case of non-corporate. In case of corporate, same cost of the project, assume 10 lakhs. Capital employed. Assume if the capital employed is capital employed is 100 crores. Please let me know the zeros how much. 1 crore, or I will take 10 crores. Okay. For 10 crores, 5% of 10 crores. How much it comes? 50 lakhs. Okay. Percent of cost of the project or 5% of the capital employed. You need to compare these two. Whichever is the higher, that will be taken it as eligible amount. Once you get the eligible amount like this, you need to compare with the actual of this. Whichever is less, that will be allowed over a period of 5 years. Okay. This will be compared with this 50 lakhs and 82 lakh 50,000 of these two, which is the least one, that will be allowed as preliminary expenses over a period of 5 years. That means each year 10 lakhs. First you add back this. Each year for 5 years you calculate or give the deduction for 5 years. This is what they have given it here. Okay. Deduction. The amount qualifying. Amount qualifying means of these two, this is the qualifying amount. Qualifying for amortization would be allowable as a deduction in 5 equal installments. This will be deductible in 5 equal installments. This divided by 5, you get 2 lakhs. I just showed the non-corporate, the same logic applicable to corporate also. Beginning with the previous year, that means when you have incurred and when you are calculating the eligible amount or qualifying amount from that year, it is allowed. What is the capital employed means? Okay, first we will see quantum of deduction. 5% of cost of the project in case other than Indian company. Non-corporate, 5% of cost of project in case of non-corporate. In case of corporate, in case of Indian company, at the option of the company, 5% of cost capital employed or 5% of cost of project, whichever is higher. 5% of cost of project or 5% of capital employed, whichever is higher. This one, 5 lakhs. That will be compared with this. Whichever is less, that will be qualifying amount. That qualifying amount divided by 5 will be the deductible amount. Are you guys understanding? means in relation to expenses, you have to be very careful in this. You cannot take everything. Whatever they have mentioned, you have to take that. Expenses incurred before the commencement of the business means the actual cost of fixed assets. Whatever the fixed assets you purchase, that will be the cost of the project. Okay, fixed assets means asset side, first item. Then what is meant by capital employed? Capital employed is nothing but aggregate of issued share capital, debentures, and long-term borrowings. Long-term borrowings. But you need to take long-term borrowings where the maturity period is 7 years or more. I think it should have been given somewhere. If it is not given, you can take. But I read somewhere it should be minimum period of not less than 7 years. Okay, any amount you borrow which is repayable for a period of more than 7 years only, you should consider it as long-term borrowing. If it is 5 years, you should not take it into account for calculating capital employed. These are all the minute points you guys need to remember in this. You might get separate question on deduction available as preliminary expenses. You might get question on separate question 4 marks, or it will be included in main question. Whatever the amount paid by the company to employees who has taken the VRS, that entire amount will be spread over a period of 5 years. Preliminary expenses and VRS expenditure are one and the same. 5 years. First year plus another 4 years. That year when you make the payment plus next 4 years you will have to claim. It is nothing but 5 years. Section 36, other deductions. Other deductions means whatever the deductions which is not covered from section 28 to 35, which will be covered in 36 few, and which is not covered from 28 to 36, it will be covered in 27. 27 is the, what you call the residuary section for deduction. See, deductions means it can be deductible. You have to deduct. If it is not debited to P&L account but given as an adjustment, you can deduct that. First one, insurance premium. Whatever the insurance premium you have taken on the asset, that is deductible. On asset and stock, it can be deductible. Premium taken on the health of the employees, you can deduct. Okay. But one thing please remember with respect to this, it should not be by cash. Other than cash, only deductible. If it is cash, not deductible. Bonus and commission, deductible, subject to section 43B. Actual payment should happen. That I will tell you when I come to section 43B. Interest on borrowed capital. Interest on borrowed capital means you have taken the loan from the banks either to carry out your day-to-day operations, that is called as operating loan or working capital loan, or purchase of asset. If interest on that loan, if you have claimed it on the basis of accrual means debiting to the P&L account, but the payment will be made later on in the coming years. I think Shantamurthy sir maybe relate to these things easily because he is from banking background, I think it can be easy. You can easily relate. I hope. Right, sir?
Yes, sir. Yes, sir.
Yeah.
Yeah.
The businesses will make a provision entry, that means payable entry in the books of accounts at the end of the year, stating that this much interest has to be payable to the banks. When it has been debited, it is presumed that it has been deducted in arriving at the profit. If those interest has not been paid to the banks and financial institutions, including cooperative banks and societies, such debit to the P&L account of interest which has not been paid on or before due date of filing return of income, those interest has to be added back to the profit. Okay. If any interest relating to any loan taken to purchase of fixed assets, interest on those loan should be capitalized until the asset is put to use, to the date of put to use date. Until then, whatever the interest component relating to that asset for the loan taken for the purchase of asset, that quantum of interest has to be capitalized to the asset, and on which you can claim depreciation. After the asset is put to use, till the end of the previous year, whatever the interest becomes payable or paid, that can be claimed as deduction, provided if it is paid. Okay. You will get this component for depreciation calculation also. You have to familiar with this. Up to the date asset is put to use, it should be capitalized. After asset is put to use, it should be deductible. Deep discount bond you will not get. This is important. These two. You get adjustment or items which will be debited in P&L account. Okay. See, contribution to provident and other funds. Who is contributing? Employer and employee both. But employee will come here. This is only employer. When the employer contribute to the PF of the employees, that contribution amount has to be deposited to the respective funds. Funds means if the PF contribution is there, that PF amount should be deposited to the PF in the PF department, to the accounts of the employees. Okay. If that contribution is not deposited within the due date of the specified fund, normally with respect to PF, 15th of next month is the due date. If any person who is doing the business and he is contributing the PF amount, that PF amount is not deposited within 15th of the next month to the respective employee's account maintained in the PF, the same shall be disallowed. Disallowed means added back to profit. The same logic applicable to employee, but there is one exception to this employer. If he fails to deposit within 15th of the next month. If he deposits the same within the due date of filing return of income, he can claim deduction of the same contribution amount from the profit. Whereas with respect to the employee's contribution, that means you are contributing to your own PF account. That contribution will be deducted from your salary and it will be remitted to the PF account, PF department. If your contribution is not remitted within the due date of the specified fund, that is 15th, with respect to PF, normally PF will be given within 15th of next month. That will be considered as income of the assessee. When it is presumed as income, the same will be added to P&L or profit. Okay. With respect to PF, these two are very important. You will get question on this. Bad debts. Bad debts means what?
Debts which are not recoverable.
Debts which are not recoverable. Okay. Assume you made a sales to X. X has to pay the amount to you. You made a sales of rupees 1 lakh to X. X has to pay rupees 1 lakh to you. X will pay only 90,000 and he will tell that he cannot pay 10,000, which you cannot recover. That 10,000 will be treated as bad debts. In the accounts, you should pass the entry for the bad debts. Then only the same thing will be allowed as deduction. If you do not pass the entry in the books of account, you cannot claim the bad debts as deductible expenditure. It should be actually written off in the books. Allowable debt written off as irrecoverable. Then only you will get the deduction on this. Otherwise, you will not get the deduction on this. Yes. If nothing is given in the adjustment, don't do anything because it has already been deducted while arriving at the profit. This one important. You have to concentrate who is eligible to claim this. Expenses on family planning. If the expenditure is in capital in nature, business person, assessee will incur expenditure on the employees towards family planning expenditure. If it is in capital in nature, allowable in 5 equal installments. If it is capital in nature, it will be whatever the expenditure incurred by the employee assessee towards the family planning expenditure of the employee. That amount will be divided by 5. One portion will be allowed in this year. Balance 4 portion will be allowed in next 4 years. And if revenue in nature, it shall be fully allowed in the previous year in which it was incurred. This deduction is allowed to corporate assessees only. That means if employer is an individual, if he incurs any expenditure in capital in nature towards family planning of the employees, the amount is not eligible for deduction. Okay. You have to be very careful. I told you, no, there are certain specific items or expenditure will be allowed only to companies. Few will be allowed to all. Few will not be allowed to firm. Security transaction tax and commodity transaction tax, it is fully allowed. Okay. Next. Other expenses. Other expenses means this is called as general deduction. Section 37(1), where up to which whatever we have discussed is the specific deductions. They have given the expenditure head, the nature of expenditure they have given. Those are all specific. There are other expenditure which is not specific, but it has been incurred in relation to business. Those are all covered under this. Example, have we seen anywhere salary expenditure? Salary? Have you seen anywhere in whatever the sections we have studied? Salary, have you seen? Salary to employees? No, such expenditure will be allowed under this section. Okay. For this, assessee has to fulfill certain conditions. What are those conditions? The expenditure should not be covered under section 30 to 36. Whatever the expenditure we have discussed so far, it should not be covered in that. Then only it falls under this. It should be incurred during the previous year. The expenditure should be incurred in the current previous year. In our case, our previous year is 22-23. In that year, it should be incurred. It should not be in the nature of personal expenditure. It should not be in the nature of personal expenditure, like personal expenditure of the directors should not be debited to your P&L account. In case of company, I gave just an example. It should be wholly and exclusively incurred for the purpose of business. And it should not be in the nature of capital expenditure. That means it should not create any asset on which you claim depreciation. It should not create, the expenditure should not create any asset. Capital expenditure means asset. The last and foremost, it should not be in relation to infraction of law. Infraction of law or prohibited law or illegal. This is the most important thing. In this penalty, fine, everything will fall. Okay. Let me give one or two examples. Please tell me whether it is allowed or not. Okay. You guys have familiar with riding two-wheeler, driving four-wheelers and all, no?
Yes.
Assume that you are in hurry. You jump the signal. Other side, police will catch you and impose a penalty of 10,000 rupees daily. Daily 10,000 rupees. 30 days, around 3 lakhs. You have to pay fine. What you will do? You will take that receipt and give it to your accountant. Your accountant will record it as penalty. 3 lakhs. Is it incurred in relation to business? That penalty amount, 10,000 jumping of signal is in relation to business?
No, sir.
No. Is it not for violating law or is it for violating the law? Violating the law, right?
Yes, sir.
Hence, whatever the amount which has been booked as penalty shall be added back to the profit. This is one example. Second example. You have a business. There are so many employees and cashier is also there. I think Shantamurthy sir may relate all these things easily, and whoever is working in a corporate sector or having their own business, they can relate. One fine day, cashier stolen the cash and absconding. Assume that cash was 1 lakh. You will pass the journal entry, loss of cash 1 lakh, and you credit your cash account. That means gone. Is that cash loss, absconding, or theft by the cashier is in the nature of business? Is there any infraction of law from your side? You have to see. Or it can be allowed or disallowed. You might get case studies on these things. The cash stolen by the cashier is normal in business. In most of the business it happens. 5 rupees, 10 rupees cash will be stolen. It is in relation to business. Hence, it will be allowed as business expenditure. Third one. Your company is in rural area where there is no street lights, proper road. You will incur certain expenditure. Assume 100 crores of expenditure to lay the road and 50 crores to install the street lights. Now you tell me, laying of road in that locality or in that area by the company and putting the street lights is allowable expenditure or not? First thing, you have to analyze this one, keeping in view with all these things. This one, laying of roads is not covered in that. It will not there. It should be incurred in the previous year. Yes, it is incurred in the previous year. Is it incurred wholly and exclusively for the purpose of business? Laying of road is the business of the purpose for, is it in the nature of business? Is that your business? Laying of road is your business?
No.
No. Is it in personal nature? I mean, is it for director who only uses the road, or public will use the road? General public will also use. It is not in capital nature because no asset has been created by the company. It is not the company's asset. It is the government asset. It is not the infraction of law. It is not prohibited also. It will not fit into any of these things. Still, it is allowed on a commercial expediency. Any expenditure incurred which can benefit the company directly or indirectly, those expenditure will be allowed as deduction. Example, have you guys gone to Silk Board to Electronic City? From Silk Board Junction to Electronic City, have you guys gone? Any of you?
Yes, sir. Flyover is there.
Flyover.
Yeah.
Do you guys know that Infosys also sponsored that flyover? Cost of the flyover? Around 500 crores something they have given. Why they sponsored that? Because Infosys employees can reach the office well in time without any disturbance of traffic. it indirectly benefits the, or directly or indirectly benefits the Infosys also, right? Hence, whatever the expenditure incurred or sponsored, that amount will be allowed as deduction. See, accounts is different, tax is different, but you have to see the tax with reference to accounts. Okay, this is about section 37. They are given all these things. Go through. I can give n number of examples. I don't think which is needed as of now. Please at least go through loss through embezzlement. I told now. This one I told you now, cashier. That is the one. Allowable losses, robbery, dacoity, embezzlement, non-recovery of advances, everything is allowed. From now, disallowance will start. Up to this we studied allowance. From now onwards, disallowance will start. Please take 5 minutes break. Now it is 7:30. Please come back at 7:35. We will start from this because it is altogether opposite to what is allowed. Okay.